afternoon. There is overlap. Some people that were here this morning are here this afternoon, but some people are brand new. So some of you that were here this morning, please indulge the ones that are new here this afternoon. Mike, there's a few new ones. Could you raise your hands if you weren't here this morning? Okay. So by way of introduction, my name is Frank Guinan, and I'm a small business person like a lot of you. I work out of my home office in Yarmouthport, and the primary services that I provide is that through my website, you can purchase and download QuickBooks. I come out to your site. I train one-on-one. I do group training. I also play the intermediary. As you see, the last part of my name designation is MBA, so I have advanced business training. So I often play the intermediary role between the CPA and the business owner to help make QuickBooks do what the owner wants it to do. I've worked with very large companies, multi-million-dollar companies that have had incredibly sophisticated reporting and management needs, and I was the guy in the middle that understood the CPA and understood the business owner and got QuickBooks to do what they were looking to have it do. Also, during this time of year, during tax preparation, you all are scrambling to get your, how many have QuickBooks? Okay. You're all scrambling to get your QuickBooks ready to get to your CPA, prepare your tax returns. So again, I play the intermediary role between the owner, the bookkeeper, and the CPA to get QuickBooks ready to hand off. I was talking to some people here earlier. One of my really raison d'etre things I get really excited about is I have advanced business training. I've come out of business school, and you see all the scandals that are going on out there. There's just this general over-ingrained attitude of just high expectations of big money and just, fast lifestyle and just kind of just being up there in a lofty business world. But what I've been really touched on, I made a conscious choice to not go to New York, not go to Boston, but to work here on the Cape. And you all represent the bulk of the business activity in America. And what I love doing is sitting down with owners and managers and bookkeepers and empowering you to really understand how to use a tool like QuickBooks and other accounting tools to really manage your business more effectively. Because the world that we're in it's an information revolution, and QuickBooks is a tool where years ago you used to wait for the accountant to prepare your profit and loss and balance sheet maybe quarterly or annually. Now, if you're using QuickBooks properly, you can get incredible reports at the click of a button. So part of what I do is help for whoever's open to it, and the relationship I've developed over the years is helping people really use this tool, not to become accountants, but to become skilled business owners. I tell people the same reports, the same tools in here are those that are available to the Fortune 500 people. All they have is more zeros at the end of their numbers. That's all. So part of you coming today is you're no longer ignorant in the sense that you don't have to defer to the CPA and the consultant and all of that for you managing your business effectively. We're living in an information revolution with something like QuickBooks, where you can become as an adept and as skillful a business owner or manager as any of the top Fortune 500 companies. So that's one of my delights, is to empower you all who are open to it to use it for that end. So the way the presentation is going to work today is what you have in front of you is a copy of every slide that I'm going to present, and it's yours to keep. And the intent of it is that you should be able to take this home and take the information that I've given you verbally. I do a lot of extraneous stuff, as probably some of you in the earlier session. This is all about giving you as much information as you want about the program. So not everything I'm going to talk about is on those pages. But everything that's on those pages should give you enough information to go back and to use this program as a contractor. Okay? Now, it's advanced from the standpoint, it's advanced for contractors. This is not an advanced session. It's geared specifically towards contractors. Did you understand that, Kelly? I know you're not a contractor, so it's 3 years? Okay. Okay, good, all right, good. So if you're not a contractor here, this is really more specifically geared towards contractors. Taking the morning session, which was a broad beginner session, and then really gearing this towards the specifics of contractors. So this is an interactive session. If you have questions, feel free to raise your hand, and I'll do my best to answer your questions. If I can't answer here, we'll have a break around 3:15, and I'll hang out afterwards. This will be done around 4:30 to 5, and I'll hang out and answer your questions. We can also exchange emails if I can't answer the question here, and I'll do my best to research the answer to your question. I am going to pass out a survey at the end for those of you that were here this morning and already did it, and I'm still great, then you don't need to fill this out. But if you have anything to say, Frank, got some problems, then feel free to communicate that to me. Okay? So before we get started, are there any general questions? Okay. Let's get started. The objectives of this presentation this morning is, I work with a lot of contractors, and as I said this morning, 30% of QuickBooks client base are contractors. And depending on the nature of your business, the size of your business in particular, QuickBooks by itself may not be the best fit for your company. So we're going to go through those steps because I've dealt with companies where QuickBooks wasn't necessarily the best fit and they really needed another product. So that's the first step, to make sure QuickBooks is correct for you. And then, as I did this morning, I'm going to go over the critical steps for successful setup of the program. With you contractors, your accounting, if you're using the program for job costing, is complex. Okay? Your accounting world is not easy. Okay? And if you don't set up the program properly, you're really not going to get good information. So I said it was important this morning. It's even far more important for you because if you're using the program to do job costing, estimates, and all of that, then the setup is absolutely critical. And finally, beyond setup, I'm going to go over some of the features specific to you as contractors for you to use the program successfully. So the first thing is QuickBooks the right fit. So again, I went over this morning, so for those of you who are here already, please indulge me here. But the first product is QuickBooks Pro. And this is QuickBooks' basically all-around solution. For most of you, QuickBooks Pro will be absolutely fine. It's $199.95, that's a 10% discount. I'm what's called a certified QuickBooks Pro advisor. I take testing every year for me to make sure I'm up on the latest and greatest in QuickBooks. And because of that, I'm able to pass a discount on to you. So you have within your booklet my card. You can order QuickBooks through the website and download it directly to your system. And you're entitled to that 10% discount. You can have the program up and running in about 20 minutes. Now, if you're like, well, I have a CD, you can order a CD if you want. You can order a CD and a download. Whatever is your preference. Now, to put this into perspective, because you all probably have Staples in your head, the price is about the same as Staples. Depending on what kind of sale they're running or whatever, it might actually be a better price. QuickBooks Pro allows for up to 5 simultaneous users. What that means is that if you have, again, depending on the size of your company, if you have the owner, an accounts receivable person, accounts payable person, all wanting to use QuickBooks at the same time, you can have up to 5 people using the product at the same time, but you have to buy it 5 times. So they give you a discount for 3 users. Instead of about $600, it's $550. You have 5 people, you'd have to buy it 2 more times. Okay. So again, so through me, you get a 10% discount. Against Staples, it would be comparable. Now, what is different for all of you from this morning, if you pay attention to the list here, what I've listed here are those features within QuickBooks Pro unique to contractors. Okay? So QuickBooks Pro will create estimates. It'll create progress invoices from those estimates. You have the ability of taking job-related expenses and adding them to customer invoices. And you can track employee time and take that time and put it on customer invoices. So this is all available in Pro. QuickBooks Premier. So again, that's not everything QuickBooks Pro does, but again, that's what's geared towards contractors specifically. Earlier this morning I talked about QuickBooks Premier and the It provides solutions for a lot of different industries. I'm talking here specifically about the Premier Contractor Edition. It's $399.95. Again, purchasing through me, you get a 20% discount. You have 5 simultaneous users, and it's about $1,100 for a 3-user value pack. QuickBooks Premier has everything QuickBooks Pro has, plus these additional features. So these are some of the reports I've listed that over the years I've had people ask and say, hey, do you have this report? Do you have that report? And we're going to go over these in more detail later. But the first report is job costs by vendor and job detail. So if you needed to know the costs related to a particular job, and you wanted it by vendor, you wouldn't be able to get that out of Pro. There's certain ways to create it, and it's a little complex to do it. But this is a canned report. You just click on it, and it comes up automatically. And it goes the other way, too. So job costs by job and vendor, or by vendor and job. So either way you want to look at it. This other report, cost to complete by job detail. It's incredible. Again, I've seen that on programs that are thousands of dollars more than this. Basically, you input into QuickBooks to say, this is how much complete I believe we are on this particular job. QuickBooks will calculate and say, okay, if you're saying you're 1/3 complete, if you track according to what you've input to this date, this is how you're going to end up. So it'll show you you're going to end up over on the job or under or whatever. So it's a nice way as you're progressing through the job saying, hey, if I keep tracking this way, where am I going to end up? And you can make your adjustments early on. Unpaid bills by job and expenses not assigned to job. This is a good, the last report, expenses not assigned to job, is a great report to make sure from a data entry standpoint. You can call out the report, and if you go, oh, wait a second, that should be assigned to the Smith job, you can double click it and change it. So it's a great way to kind of make sure everything's been assigned to jobs. QuickBooks Premier also has a built-in feature to track workers' comp and liability certificate expiration dates. So remember, everything I'm listing here is not available in QuickBooks Pro. So if you're going, yeah, I want that, yeah, I want that, yeah, I want that, and you have Pro, you should upgrade to Premier. Price levels, there was a discussion here earlier about pricing. Pro has what's called fixed percentage. So if you had a certain pricing thing, a customer discount. I have a preferred customer discount, 10%. So what it will do is on that percentage basis, it will reduce all prices by 10% automatically. Okay, so that QuickBooks Pro has that capability. QuickBooks Premier has price level per item. So if you had 50 items, you could go through and have a variation for each of those 50 items. You could do it by percentage, you could do it by dollar amount. You can't do that in Pro, you can do that in Premier. If purchase orders is something you use from Premier, you can generate purchase orders from estimates. You cannot do that in Pro. And finally, there's some advanced business planning features. If you're interested in the business plan part of the program, there's some features geared towards that are not in Pro. Now, the granddaddy of QuickBooks is their Enterprise solution, and this is really for larger companies. And as you see, the price is about $3,000, and that's automatically for 5 users to be able to use it simultaneously. So right off the bat, when you purchase it, you get the capability of 5 users being able to use it. That's why it's for larger companies, payables, receivables, you got the owner, and maybe you have some project managers or whatever that are using it. So right off the bat, you get 5 users that can use it simultaneously, and you can go up to 30 users using it simultaneously for $13,000. So the primary difference, again, is a progression here. We're going from Pro, Premier, to Enterprise. So everything Premier has, QuickBooks Enterprise has, plus these additional features. Far more capacity. So if you're inventory heavy, this can go up to 100,000 plus. I actually was consulting for a fairly large company, and I was told by the rep that it can actually go up to 1 million. So 1 million inventory items if needed. This company had a couple 100,000. Enterprise also has the ability to integrate with what's called velocity inventory to do some advanced inventory tracking. If you had multiple locations in multiple companies, we were talking about this today. If you had multiple companies in QuickBooks Pro and Premier, you create a separate working file for each one. Well, you do the same thing in Enterprise, but if you wanted to consolidate the reporting, your profit and loss and balance sheet, you can do that in Enterprise. You can't do that in Premier Remote. So if you wanted one P&L, one balance sheet with 4 companies, you can do that in Enterprise. The other is the ability for Enterprise to integrate with other third-party software. It is what's called ODBC compliant, which means Open Database Connectivity. So if you wanted to take your information, again, the largest client I worked with, they had certain reports that we couldn't get out of QuickBooks. So we needed to tweak the data, dump it into an advanced Excel feature, and this. So there's an ODBC driver that's used. So in other words, if you're working with Enterprise and you need to do some sophisticated reporting or work with some other third-party software, Enterprise has the ability to do that. So I have some general guidelines here for you to understand if QuickBooks is the right package for you. If number 1 says if you're using QuickBooks and you're getting chronic and deteriorating performance, blue bar, constantly crashing, taking 100 years to boot up and all of that, so you're having performance problems. If you have a need to track lien waivers, workers' compensation certification, if you need to calculate prevailing wage rate, workers' comp class codes, if you require certified payroll and AIA documentation, if any of that applies to you, then the awesome thing about QuickBooks is for larger companies, many may be able to use QuickBooks Enterprise, but there's a solutions marketplace that QuickBooks provides. QuickBooks is to the accounting software world kind of like what PCs are, in the sense that QuickBooks has about 90% of the marketplace. So everyone's created software to integrate with QuickBooks. Just like you got all the peripherals and all the things that integrate with PCs. So QuickBooks has a website. It's marketplace.intuit.com. And if you're using your product, whether it's Premier, Pro, or Enterprise, you're like, gee, I just am not getting the invoicing functionality out of this I want, or gee, I'm just not getting the specific reports I want. Is there something out there for my industry that can help me get the information out better? There's a whole marketplace that has evolved that interfaces with QuickBooks. That's the first place I would start. You go to marketplaceintuit.com, you type in your industry, and it'll come up with all the compatible software with QuickBooks. And they range in price from a few $100 to a few $1,000. That's a great place to start. The other is Master Builder. Master Builder, believe it or not, used to be owned by Intuit. They are now owned by Sage, which owns their former competitor, Timberline. And from a business standpoint, one of those has to go away, I would think, because they do the same thing. Timberline's the granddaddy of construction accounting software. Both these products, Master Builder and Timberline, cost for full implementation, including the software and consultant, you're talking $30,000, $40,000, $50,000. But again, it provides the functionality I talked about earlier. It's just so generally it's for larger companies. And again, not knowing who's in the room here, if you are a larger company, you fall into that category. These are the alternatives for you to consider. Any questions on any of that? Yes?
Yeah, 2 more news books.
2 more? Yep.
Yeah, Frank.
Do you have another one on any of these tables? No extras?
Is that one on the very end of the table there, against the wall?
Can someone share with her? Or? You sure? Okay. All right. Well, basically what's there is just here. All right, again, setup. So as you said this morning, images. So this famous Tower of Pisa, just they lucked out, turned out to be a great tourist site, but actually that's a architectural failure. Someone did something wrong with the foundation, and it tilted and did not stand perpendicular as it should. So it's the same thing with QuickBooks, and like I said earlier, you all have a complex accounting world, so setup's key. If you don't set it up right, you can have some real problems in getting the job costing reports and all that, to give you the information that you need. So, preferences. Preferences are the section within QuickBooks that enables you to customize QuickBooks to the specifics of your particular company. And this is what the screen looks like. So basically on the left-hand side, these are all the various categories of preferences. So during the initial setup, you go down through each particular one, click the My Preferences or the Company Preferences tab and make sure everything's set up properly. So as contractors, being more specific, these are the preferences that I would suggest that you pay particular attention to. Class tracking, price levels, sales tax, time tracking, and so on. So let me go over those. You go up here to edit, preferences, okay, class tracking. So we click on the accounting tab and the company preferences tab. Okay. Why would I use class tracking? Class tracking are for companies that have different locations. So you have a Hyannis location, a Falmouth location, Martha's Vineyard, Boston, wherever. And you want to know the profitability of each location. Am I making or losing money on those particular locations? Types of business. So as builders, you might have a commercial part of your business, a residential part of the business, maybe you have a municipal part of the business, whatever. Again, you would set up those classes to say, am I making money, commercial or residential? For you landscapers, I know one of the issues you wrestle with is mowing. Am I making money on mowing? You know, should I drop mowing? Your real money is in the new construction. So what you could set up here is, new construction, residential mowing, commercial mowing, and all that. So, and then the other side is, if we talked about earlier, DBAs, if you had different divisions or different entities that you operate under, and you wanted to keep them separate, so you had 2 or 3 entities that you worked under that did not have separate tax ID numbers, but you wanted to see how profitable they were and wanted to have separate profit and loss for each of them. So that's why you would use classes. So it's just as simple as checking off class tracking. And then when you go in and you write checks, enter bills, invoices, there's going to be a section here to pick your class. So in this case here, it's new construction, remodeling, and overheads a class where you can put those that don't fall into those 2 categories, you can put into the overhead category. Now what QuickBooks will do, and I recommend this especially early on, is to check this off, prompt to assign classes. So when you're doing your data input, it'll prompt you each time saying, hey, you didn't put in a class. So until you get into the habit of putting in classes, check that box off. It'll prompt you. Then when you're like, hey, I get it, then just uncheck it, and you don't need to do that going forward. Price levels.
Can you go in and edit whatever and add a class to it, and does that go backwards or does it only go forward?
Say that again?
Say you had lawn care and you wanted to say Hyannis location and lawn care, something else, whatever. Should you never put the class in and now you put it in, will it go backwards or will it only go forward? Will it fill in the blanks backwards?
It'll fill in the blanks backwards. So if you had a check dated a year ago and you put it to the class, it's assigned right to that class, yeah. But by picking class tracking and saving that, it's not going to update everything. You have to do that manually.
I'm sorry?
You have to do it manually per transaction. So every invoice you have to change, every check you have to change, just by picking class transact that you're using class class tracking. It's not going to just assign classes to them. You have to do it for each individual transaction.
So you decide all of a sudden, I'm going to assign this a class, all the bills and invoices that have to do with it, that are the same item aren't going to have that class anymore? I mean, they won't, you have to go back to every
You have to go
one.
back to every single one. Yeah. You pick a point in time and change them all. Yeah. All right, price levels. Let's see if I remember where that is. Okay. Price levels is the fixed percentages, but these price level per item is not. And I'll put that over. So here, to get price levels in place, is you just check this box off, use price levels, and it's as simple as that. And then I'll show you how to create price levels later in the presentation. Inventory and purchase orders. Just click this box and indicate that inventory and purchase orders are active, and then the rest of the boxes will default on the bottom, and you can change those according to your individual preferences. You should have them under preferences. Should. So it's in there. It just might be grouped as something else. I can review that with you at the break. Estimates and progress invoicing. So do you create estimates? Yes. Do you progress invoice? Yes. Okay, simple as that, just checking off boxes. Sales tax. Do you charge sales tax? Yes. There's somewhat of a process to create sales tax. But like I said, there's a lot of help in here. All that to do it, you have to create a sales tax item and all that, and indicate the percentage and all that. So it's a little complex, but you have plenty of help here. I'm not going to go over that one specifically, but there's some good help there. 1099s. You file 1099 misforms, yes or no. And as I said, see here, non-employee compensation. I touched on this morning. So typically, what most contractors assume is that at the least, the 1099 account that you're going to track is subcontractors. If you had multiple accounts you wanted to do, you can simply go into here and go to the top and pick multiple accounts. And then you would say, you would check off subcontractors, any other account. So if you have multiple accounts you want a 1099 for, you can do that in QuickBooks, not just limited to one. And then time tracking. Do you track time? And for you as contractors, I would strongly recommend doing that at the least. You could, when you're looking back, you can look back to see if your projects were over or under from a time standpoint. So you may not have payroll through QuickBooks, but if you use the time tracking, at least you'll get that portion of it tracked. So all you have to do to get that enabled is just saying yes. All right, setting up classes. So if you go to, so I've activated it in the preferences, so you're all set to do that. Then you go down here, it now has a class list available. So the ones that were in this sample file by default are new construction, remodel, and overhead. So it's as simple as clicking on class in the lower left here, and then clicking new, and then just, you can type in commercial here. And hitting OK. So now, when I go home, and I write a check, I can now classify things if there's a commercial side of the business. It's as easy as that. So every transaction going forward, if we go to an invoice, it has class up here, so I'm going to pick commercial. So every transaction can now be classified. Price levels. Okay. Basic functionality of price levels is to enable you to set custom price levels for different customers or jobs. And there's two ways to do it. One is the fixed percentage, which is available in QuickBooks Pro, which enables you to adjust the price up or down, all prices up or down by a specific percentage. So you can have a special promotion, 10% off everything, a holiday sale, a for a customer discount, something like that, but it would affect every single item. The per item price level, which is only available with Premier, gives you a lot more flexibility in that for your item list, you can pick if you want to adjust any particular item by an absolute dollar amount or by a percentage. And you can do both within the price level list. So as I showed earlier, to access the preference, you just go into the Edit Preferences window and click on Use Price Levels, and you're ready to go. And then now you want to create some price levels. So to do that, you go to the List menu and choose the price level list, and then create it according to these instructions, which I'll demonstrate. So we go up to Lists, so price level list. So the first one here is their commercial price level. Okay, so the price level name is commercial. It's a fixed percentage, and the basis of this is that it will decrease item prices by 10%. Okay, so if I wanted to create that from scratch, just to show you, because some of that's grayed out, so I'm not sure if I can delete it or not. It's already something. Oh, I can't. Good. All right, so down here, price level, new, commercial, and price level type. I'm going to pick fixed percentage, and this price level will increase item prices by 10%. Round up, you can have it accommodate rounding. Then you hit OK. So the next step is to assign this to a customer. Okay, so I'm going to go to a customer, and we're going to pick Chris Baker here. Pick Chris Baker, double click on him, click on the additional info tab, and I'm going to click price level. And he's going to get the benefit of my commercial rate. So I'm going to hit OK. And let's pay attention here. If we go to my item list, let's see, we got framing labor at $55. So I'm going to go create an invoice for Chris Baker. See, it shows he's got the commercial pricing level up here. And I'm going to pick framing labor. Yeah, this one. Okay? See how it automatically discounts to $49.50. Okay? And that will do it for every item that I have a price attached to on the item list. So I don't have to think about it. I don't think, who gets what discount kind of thing here. So you attach, you create discounts, or any kind of price levels, maybe there's a price increase or whatever, and attach them to the specific customers. So whenever you create an invoice or sales receipt form, QuickBooks knows and adjusts the prices accordingly. Now you might be thinking, well, what if I'm not up for him being, if I'm not up to being so generous? You can pick the base rate here, and so charge him 55. So you get for this particular invoice, I'm not going to give him the rate of 10% discount. So you can override it anytime.
Is that true for the whole system though, or just override once?
Just this invoice.
Do you want him to know that you're giving him a break? Is there somewhere to...
Great question. You would just type it here. Just type it in the description. You're the second person that's asked that, and I played around to see if that commercial would come up somewhere. And my memory, let's see, we're in 2008 now. I don't remember when it was asked. Let's see if it comes up on the invoice. No, you would just type it in. Actually, this isn't showing me. Let me change that. Back to. No, you'd probably type it in manually. Yes?
Is there a way that you can apply a price level to a whole class, or you have to do them individually?
A whole class of customers, you mean?
Yeah.
No, it's customer by customer. this, you raised a great point. My mind's going here. On here, you have a customer list. Okay. Now, I've seen people use this list in different ways. Technically, the ideal way to use it is Chris Baker's your customer. He's the payor. Okay. And under here, these are the projects you did for him. Now, in theory, you could create a grouping of customers, right? And just do the one price level, and then everyone underneath it. Because I think if I went to family room, that would show the commercial pricing. So if you structure your customer list in a particular way, because like I don't want to go back and sign each one or whatever, you could kind of maybe play around with customers inside. I don't know that for certain, but that might be one way to approach it. I think if I do family room here, so we do Invoice, Chris Baker, family room. No, it doesn't have a commercial sign to it. I don't think. Let's see. No, so actually we have to apply to each individual. So get that idea. So there's no way to do that. So I learned something new. Good question. All right, so the other type of price level is the per item, which you see here, fixed percentage and per item. So in the door replacement special, I have the option here of, you've seen here, framing, instead of $55 per hour, it's $45 an hour. Installation, instead of $35, is $30. Now if I check off removal, I can do that on a percentage. Say I'm going to put that 10% lower. Maybe I do all these checkpoints. 50, 35, that's a 0. Okay, so those three. Adjust price of marked items to be 10% lower than its standard price, its cost, or its current custom price. So you have control over. So I could take a discount off of that there. It's okay. So you have a lot of flexibility in what you apply the discount to. So usually it's standard price. And then hit adjust. And then hit OK. And then we go assign it to a customer. So let's do Chris Baker again. And say he's now the door replacement special. I hit OK. Now I'm going to go home, create an invoice form. So now it comes up door replacement special. So is removal one of them? Yes. So removal was one of them. So that's been adjusted. So again, so anything. Now if I go to farther down the list, wood door exterior, is there a number associated with that? That's the, no, that's part of the door, of course it is. Of course it is that one. Hold on. Decking wall. The ones that weren't part of that list would have the same base price. So, and again, if you can choose at any particular time when you're creating the invoice. So he may come up as door replacement special, but if you want to have some variation other than what's coming up automatically, you can play around with it line by line of what you create. The key thing to the price level is so you don't have to think about it. If you've got discounts for varying people, for varying items, this sets it up so QuickBooks will do it automatically for you when you create it. Is it Nancy? So, Nancy Jane? Okay. Did that answer your question on price level? Okay. You're welcome. Okay, again, for you people that were here in the morning, this is a repeat of steps you did setting up customers. So if you all have a existing customer list and you want to get it into QuickBooks, you can import that from Excel. Certainly if you have a third-party program, the best thing to do is to take that list, dump it into Excel, and then bring it into QuickBooks. Same thing with your vendor list. Otherwise, you can add in your customers one by one. You can add them on the fly when you create invoices and all of that. So this is the screen that pops up for a new customer. And what's new for the people that were here this morning is this Job tab. So we have up here, new customer and job. Now, the way QuickBooks does a job is family room is considered a job by QuickBooks. If I took Bristol Sonia and I moved her, dragged her to the right underneath Rafael Belinsky, that's now considered a job under Rafael Belinsky. Okay? So I've seen people that have had messed up customer lists, and if it's messed up and things aren't in the right places, one way to make sure that something's a job is just to drag it to the left, and QuickBooks will interpret that as a job underneath that paying customer. So that's pretty much all QuickBooks does to create jobs. It's putting that underneath the list and indenting it to the right. So when we look at Sonia Bristol here, notice when you add a customer, you have 3 tabs: address info, additional info, and payment info. Okay, there's no job info tab. What QuickBooks does is when you create a job, it adds a 4th tab, job info. Okay? So the things you can do here is, we'll call this deck. Job status. This is great, again, from a management standpoint. You can mark these jobs, these various categories, everything from pending to closed to not awarded. Great mark is not awarded because you can go back and look and say, of all the jobs I bid on in 2009, how many did I get and how many were not awarded? So this is one way to get a sense of your bidding success. And you can create a report, flag the ones that weren't awarded. You can go back and say, why didn't I get those jobs? So that's one reason you would use this. Let's just mark that as awarded. Well, we'll do in progress. You pick the start date, so 01, 01, 09. Projected end, 06, 30, 09. And then the actual end date. Again, you could do comparison, generate a report, compare your actual end dates to projected end dates to give you a sense of how you did relative to what you projected. So let's say that's 08, 01, 09. Love you guys, but you never finish on time, so I'm going to say it's over. And then the job type, again, is for internal measuring purposes. If you want to qualify your jobs, these are for your purposes. So again, this is redundant. If you remember the other list, I already showed you model. So maybe you just hit repairs here. So if I hit OK, what QuickBooks does is it just indents it and put it under sign. So that's now considered a job. It's as simple as that. That's how you add jobs within QuickBooks.
So it's going to go under wherever you
Highlight it, exactly. So if I highlighted Sonia and I said add a job, it's going to add it underneath her. Now, if it was the wrong set, that wasn't Sonia, I messed up. We can drag it to the left and then say, okay, it really belongs under Christy here. And put it there. Or double click on it and you can change it here and say, no, it belongs in Sonia. And so, and it'll move all the transactions, everything over. Everything will change in the upgrade. Now, if you expand the screen here, and I drag this to the left, and I wanted to see all my awarded or pending or the status of my jobs, I right-click. This is true in the vendor center. I think that's it, those two places. I can add columns. I just click here, customize columns, and I want to add Job status. Move it up. Okay. There's my job status, so in progress, closed, pending, and so on. I can sort it if I wanted to. It'll sort within the jobs. If you didn't have these indents here, it would sort the whole column. But this gives me a sense of, and then you can print this in a report as well.
Excuse me.
Yes.
Can I use this for distribution where I'm expecting an order to come in for like job status, where it's at, and projected dates?
I guess you could, yeah.
End dates?
Yeah. There's Premier Manufacturing, Premier Wholesale and Distribution that has the ability to track ship dates from, promise dates and all of that. So that's something specific to that program. So you could accomplish what you're talking about here. The kind of making this do something it wasn't intended to do, but it's one way to do it because I believe here you can install this column so you have capability of putting in the projected end date, start date, and all that, and looking at your data value.
Or you have to have a spreadsheet.
Yep. Which again can be printed.
If you had a business that you like only did one job for one person and like that's it, and then you do another job for somebody and that's it, like you're doing a certain special service.
Right.
I'm trying to see from here, my eyes get a little bit, but you're saying you have all the names and then if it's closed or open or whatever, but after like 3 years or something, you're going to have a long, long list of people that are closed. Is there a way to get them inactive and just put them off the list?
If you're all done with Sonia, just right-click her and you make her inactive, and it disappears from the list.
So then the list doesn't get huge.
So your list doesn't get huge. Because what this does impact is when you're typing in, when you're creating invoices, the whole list will come up, and so these will come up as well. When you make them inactive, it will not show up in that list.
That would be the same thing with items and stuff too?
Right? You can make items inactive, you can make accounts in your chart of accounts, you can make vendors inactive, and all of that. Yes. Yep. Because you can't delete them. Remember I told you, if there's transactions connected to any of these in here, you can't delete them, but you can make them inactive. And you have the capability here of, if you wanted to see all your customers, so how QuickBooks shows an inactive, I'm not sure if there's one in here. No, it's with an X. So anything inactive has a little X next to it. And if I say, okay, I want to see just my active customers, that would disappear. But if you wanted it back and said, oh, I'm doing business with them again, and you don't want to re-enter all the info, and you really shouldn't anyways, just go back and make them active again. Okay? We use that.
And right-click again?
Right. Well, no, here. You can just click on here. You can right-click to make it active, or you can just see how this X.
Yeah.
By doing that, I'm making it inactive. You can do it that way.
So he's always going to be in that list. It's just when you're using other things, he's not going to be popping up in that
Correct.
list.
Yeah, they're always going to be in that list, but either inactive or active, either displayed or not. All right. Vendors.
Wait, can I ask you a question?
Sure.
Is there any way, say you put someone in as a vendor but they're supposed to be a customer, and you're not just from here, are you able to switch them over?
Well, let me, good question. Do I have that on this here? I have it here. No. All right. For me, for example, you had Frank Dining in there, and I was a customer of yours, and you were a customer of mine. You can have me in there, but you would vary it by an alpha variation or even a numeric variation. So typically what's done is like it would be Frank Dining -C, and then me as vendor would be Frank Dining. So you can do that. So no, you wouldn't reassign anything. You have one as a customer, one as a vendor. So the distinction is just some amount of variation in there. And they'll give you a warning. You put me in there twice and say, he already exists.
Well, that's what I was going to say
Yeah.
too. Is there a way to put a customer that say if you have two customers that have the same exact name, I mean, how do you put that in?
John Smith, right?
Yeah.
They put middle initial in, and that's the same. You have to have some kind of alpha variation to get that in there.
Thank you.
You're welcome. Okay, setting up vendors. Okay, so you have your vendor center here. Very similar to the customer process. You have up here the vendor button, and you would just fill in the relevant information just by tabbing through each field. We'll look at when it's already been filled out. So I'm just typing as I'm going from the information that I have. And as I said to the class this morning, if there's a variation between the vendor company name and how they want it printed on the check, you can do that. So you have the internal name you have for QuickBooks, and you have the name they want to have it printed on the check. So that's where you fill in that field in the middle right there. You can also, similar to the price level, you can do a billing rate level. I'm not going over that this morning because the process is pretty much the same. So if you, for instance, an electrical contractor, you've got apprentice and journeyman, you can create billing rate levels which you would attach to vendors to bill them out at various rates. So if their standard rate for an electrician was $50 an hour, the apprentice might be 40 and the journeyman might be 60, that kind of thing. So that's how you use the billing rate level. And for the workers' comp certificates, I'm in the QuickBooks Premier Accountant Edition, so I'm going to switch to the Contractor Edition to show you the workers' comp certificate. But what is an add-on?
Just that one certificate.
No, it comes with the Premier contract.
Okay. But you can't, if you already have Pro.
No, you can't. You have to buy Premier.
Okay, good luck.
So it's shutting down this time. A minute or so. Someone asked earlier, gee, I just installed my update by accident yesterday and the computer was stuck for like 20 minutes and, what should I do about that? I don't, as you see, I don't even install the updates because early on when I was working in QuickBooks, sometimes the updates aren't good. I got an argument with one person saying, our updates are awesome, they're meant to solve problems. And I said, well, no, in some instances they create more problems than they solve. So if the program you're not having problems using it, it comes up about installing updates, I'd really recommend not installing it because I've had some people where for one reason or another it's created a new problem that they didn't have before. Right? So I always hit install later.
Can't you just turn off the automatic automatic? It has a spot in the setting that says check for updates automatically. Just check that off and then I'll never ask that.
Yeah, I believe so. Yeah. It's a good suggestion. That's a default. So when you install a program, it's going to do automatic updates automatic. So you have to know to look for that and all that. So, all right, vendors. Okay, so you can see down here, workers' comp expiration date and general liability expiration date. This is new since 2000 and might be 6 or 7. So we would just put expiration date 03/01/09, 03/01/09. Hit OK. Now you'd think they'd have some kind of fancy report, workers' comp expiration report. They don't, unfortunately. Hopefully they'll get that.
So it won't flag you at all when it expires?
Say that again?
It won't flag you at all?
It won't flag you either.
I was wondering.
I don't believe it gives you a warning. It does give you a warning. Okay, well, someone here
When does it
firsthand
give
knows
you
it
the
will give you a
warning?
warning.
When you mention that person, you bring it to the vendor?
When you write the check? Okay.
Oh, good. Thank
Did you all hear that? So when you write the check to the vendor, it'll prompt you that the workers' comp is about to expire, and don't write that check. That's great. All right. So the way to get the report is the vendor. I use the vendor phone list because it's a smaller list here. Hit modify report and click off workers' comp expiration and general liability expiration, and so this shows the particular dates. Not sure how many are in here, but no, it's just them. So what this would do is it would sort it. Are you using this? Is this how you generate the report?
Well, no, actually, I put it in individually into my workers' comp, my liability, and then there was one that I was missing his current one, like I hadn't put it in yet.
Yeah.
And I went to write the check, and it was
Okay.
so came out fine. Now I'm not putting it
Now, do you ever do any reports to get a sense of where everyone's at? Okay. Well, what this does here is, at any given point in time, if you run it monthly or whatever, you can get in front of you a sense of about when everyone's going to expire, because it's not going to give you a warning. It's only going to give you a warning when you're about to write a check. So this here would sort it by date, by vendor, of their expiration dates for their various certificates. So there is no canned report. QuickBooks hopefully will come up with something soon, but you have to create this manually. So like I showed you this morning, you would go up and you would hit View and Add Vendor Phone List, and you would just call it the workers' comp / GL expiration, whatever. I skip typing, so expiration. And then save that, add that to your icon bar, and you can click it, and it would update all of that. So that's the only way you're going to get that information to provide you some lead time in people's certificates expiring. Alright, now we will toggle back to the accounting edition. Now, those more expensive programs I touched on earlier would do that much better. They give you the flags, better reports, all of that. So if that's something important to you, and I haven't explored this for anyone, but I'm guessing there's probably third-party software that will do that tracking for you as well. So that'd be the first step. That's an important feature, that you want the flags, you want the warnings, you want good reports. This is really clunky. It's more of a makeshift kind of way of tracking. Then I would jump on the Intuit marketplace, see if there's some kind of third-party software, and I bet it would be short money. It would be under a few $100 that would do that tracking for you. No, accountant is a premier edition. Okay, setting up items. I always make a point of emphasizing important sections of my presentation. This is a very important section of my presentation, and so just pay extra attention to this. This item list is critical to the successful use of QuickBooks from your world. Basically, an item in QuickBooks is anything that you sell, any product or service that you sell or provide, and any product or service that you purchase. And basically what items enable you to do is on one level, it enables you to fill out, remember I showed you earlier, invoices and sales receipts. If you set up the items correctly, the sales receipts and invoices you create will be pre-filled for the most part. There will be very little data entry on your part. So that's one of the functions that it provides. There are basically 11 different types of items that QuickBooks provides. Fundamentally, what some of them help you do, as this shows you here, basically helps you record the services or products that you provide, and some of the other ones are more like calculating items and help you get subtotals, discounts, record payments, and all of that. The first one is what I call service items. Okay, and if you're setting up a service item, let me emphasize, it's always labor. Always labor. So, internal labor and external labor. Subcontractors and employees. That's what you'd be setting these items up. So, any kind of item that you're doing that relates to internal help and external help would be a service item. Inventory is always for material, but always for material that you are tracking as inventory. And the inventory feature in QuickBooks is ideally excellent for in and out inventory. For example, as landscapers, you buy 100 yards of mulch, and 100 yards of mulch is out. If you're a kitchen cabinet manufacturer or a custom furniture manufacturer, QuickBooks can do that, but it's a little clunky, and depending on the level of sophistication you want to get with that kind of, they're called assemblies in QuickBooks. Again, QuickBooks may not be the best for it. You probably want to buy a third party. But I have worked, the feature's getting better and better every year, and I've worked with a few clients that do use the assembly feature, and it works pretty well. So as far as anything and everything you want to do with inventory, reorder points, stock status, it will calculate on the basis of average cost. So it doesn't do FIFO or LIFO. So from a tax standpoint, again, for any bigger companies in here, technically when you report inventory for taxes, it's either on LIFO or FIFO, not on average cost. So QuickBooks won't do that. Your accountant would have to do some kind of adjustment to get inventory booked in there properly. It'll tell you, there's a really cool report in QuickBooks that will tell you, it will calculate how many items you sell, if it's a product, how many you sell per week, and according to your reorder point, you'll have a little checkbox to say, in light of how much you sell per week, how many you have on hand, whether you should reorder or not. Just a report that comes up, it's really cool, and it just has a little checkbox, and okay, you can reorder those. For the more simplistic inventory, it does a nice job of managing that. So if you don't have inventory, so an example again of a landscaper, the mulch, you don't keep a big pile of mulch on your location in your shop, but it's basically just delivered to the site, then you would use what's called non-inventory. That's basically for materials that is not yours, you're just basically using it as consumed during a particular project. And other charge is basically for everything else. Disposal fees, permits, bounce house, any delivery charges, anything that's not labor related and anything that's not material related. You put in other charges. So to set up items, you go to the list menu, select the item list, or you can go to click on the items and services button on the home page. And this is what will come up. And this shows you the various choices you have. So I can't emphasize enough when you're setting these up that you choose the right type. Because As I'm going to emphasize throughout the presentation, everyone in business lives and dies by their gross margin. And if you are managing your business see that your gross margin is off, you need to understand why. Was it due to labor? Was it due to materials? Or was it due to things not related to labor and materials? So if you classified, and I've seen this quite often, is that people will set it up and put everything into service just because they don't understand the difference. So when they go back and try and figure out why am I not hitting my margin, they're having materials sit in the service section and they're like, oh, they can't, it's not easily broken down. You can dump into Excel and kind of manipulate and pull the particular items out and separate them. But in here, by default, QuickBooks has a report, which I'm going to show you in a little bit, that will break each of these into their separate pieces to give you the information to say, okay, how much was service, how much was my materials component, and how much was the other charges. So again, you can do the analysis and figure out what's driving your margin for the better or for the worse. Yes?
So you have a business and you sell new items and repaired items, or you sell new items and repaired items. And somebody says, you say, oh, it's going to cost you X amount of money to repair it, it's not economical, and they said, just keep it, order me a new blah, blah, blah. So then in your spare time you repair the item that they just left and don't care about, and now you want to sell it. Would that be a non-inventory item, or would that be another charge item?
Well, if it was originally an inventory,
somebody just gave it to you because they don't want it anymore.
Oh,
you never bought it.
If you normally carry that as inventory, it'd be out of inventory. If you don't normally carry inventory, then no, it'd be non-inventory. So it depends how you conduct your business.
But like usually with all your inventory comes in on bills.
Right, so you would, and I'm not going to go over this today, but there's ways to adjust your inventory. So you would put in and indicate that your inventory is increased by 1, and then you would pick the account where that inventory came in from. So it's a little complicated, but if you normally carry inventory, and you carry inventory in that item, and someone just gave it to you, didn't want it or whatever for whatever reason, then you would add it to inventory and account for it accordingly.
You don't carry inventory, you're two-stepping.
Beg your pardon?
You don't carry inventory, you're just two-stepping.
Then you wouldn't. You just put it to non-inventory.
It is non-inventory then?
Yeah. All right, so you make sure you pick the proper type. And again, start of this page, start here, whatever. The key to successful setup of your items, first and foremost, make sure you've chosen the proper type. I have a client he's a contractor, and this gentleman is not married and he doesn't have kids. So he's got a lot of time on his hands. And he has sub-items for his sub-items. I mean, he's got it down to the penny nail, he's got it down to the screw. I mean, he knows, he built this room, he would know every component that went into this room, how many screws he used, how many tiles he used, how many feet of tile, whatever. It's incredible. I mean, I tell him, from my perspective, it's a work of art. I mean, he's just got everything down to whatever. Now, I'm not saying for all of you to do that, but if you wanted to, sub-items is one way. If you put in miscellaneous hardware as an item, you can put in all the sub-items of, penny nails, screws, all of that. So you can go to the level of detail in tracking the components of a job to any level that you want. And sub-items is one way to do that. When you're entering in the item, if you enter descriptions in both the purchases and sales boxes, particularly the sales box, it will pre-fill. I showed that to you earlier today, that for that computer, Carl's Computer Shop, how the sales receipt, all those descriptions pre-filled because those were typed in ahead of time. The cost and sales price boxes, if you put in the cost and sales amounts on the sales documents, those numbers will show up automatically and the cost will show up automatically on the bills. One of the key elements here of this whole list is the two-sided feature. Again, of all the mistakes I see of people using QuickBooks, doing job costing, they don't use the two-sided feature. What the two-sided feature does is it gives you the ability to track the particular item on both the cost side and on the income side. For example, landscapers, okay? You have mulch. You get mulch from, I don't know any suppliers off the top of my head, but you get mulch from your supplier and you get a bill from them. Okay, so you want to track that cost. But then you're also going to bill your customer for that mulch. That's tracking the income side. But more often than not, that I see is that they only track the income side of it. So you're missing the whole cost of it. So the question is, I brought in mulch and I paid, $5,000 for this job, and I billed it out at $7,500. I made $2,500 on that mulch for that job. That's what this gives you the ability to track. So again, if you get a bill for something, you want to make sure it's two-sided. And here is the list within QuickBooks. And as you see the order here, you've got service, you've got inventory, you've got non-inventory, you've got other charges. And then you see on the account, this is the income account, it's all the same, virtually going all the way down. That's what you want to see. It should only be one income account. And then on the cost side, these should be all grouped pretty much the same. So non-inventory should be material. Okay? Subcontractors should be all the service ones. So this is the way you want to see it set up. And then, here's my client. See? It's got glue. 228 ounce DL premium adhesive glue. Nails. Brad, bright, galvanized staples. He's got it all in here. I mean, this is just incredible. So,
No.
say what? So, and this is one of the best item lists that I've seen. We work very closely. We work together on a monthly basis, and he's done a beautiful job. He gets a gold star for this. And by the way, they build homes. So there's a difference here. You can use QuickBooks to account for spec homes, and it's treated differently than if you build contract homes. So they do the spec homes. All right, so let me go through that. So we click on here, items and services. So we go, I'll use one that's been set up properly. Copy in here. All right, so the type is service, so this is labor. So this subcontractor installs the carpet for me. So type in the item name, and it's a sub-item, so I created a grouping in here. You don't have to do this. This is just one way of kind of making your list a little more readable in reports and all that. But we created a grouping called subs, so put that underneath, that's fine. QuickBooks does have a unit of measure feature in it, so again, for landscapers, might buy things by the yard and sell it by the ton. You can do that. So if you bring it in one way and pay your supplier one way, and then you sell it to your customer another way, you can do that within QuickBooks. So if this is two-sided, I'm clicking this box off. Okay, and this basically says this service is used in assemblies or is performed by a subcontractor or a partner. So if you have if you're a sole proprietorship or a LLC with two people in it, or a partnership, then you would technically check this box off. And what it does, as you see, it opens up this section down here, which is the cost side. So what you've seen here is description on purchase transactions, installed carpeting. So every time I record a bill, a vendor bill in QuickBooks for carpeting, it's going to print that in there. That's far less important than here, which is every time I record an invoice or receipt for my customer, it's going to type in install carpeting. So if I go home here, create an invoice, and pick carpet, see, it fills that in automatically. So whatever you want to see on a regular basis for these items you're adding, that's what you would put here in this description. Same thing with the cost. That will show up when you see the vendor's bill. You're paying $25 for whatever here. Again, unit of measure, $25 per hour, $25 per yard, $25 per ton, whatever you would put in here. Same thing with the sales price. That would show up in the invoice every time. Now, to emphasize, QuickBooks is a little misleading here. Do you have a QuickBooks chart? Okay. What I want to show you here is that for you, it's basically revenue minus your cost of goods sold or your direct costs, job-related costs, gives you your gross margin or your gross profit. When you're setting up these two-sided items, you want to make sure you are picking a category called cost of goods sold. Okay? This is for overhead, expense. And unfortunately, QuickBooks is a little misleading there because they're saying expense account. You're like, okay, what expense? Okay, there's my expense account. Which ones do I pick? And when QuickBooks, when they create your chart of accounts, sometimes they'll put, instead of subcontractors being up here, they'll be down here. And they'll put materials down here. So when people are setting it up for the first time, they'll say, it says expense, I'll connect it to expense. Ooh, I see materials down there, I'm going to connect to that. And you won't get the same reporting, the proper reporting to get you this number here, because now materials is down here instead of up here. So, so the key thing is, when you're picking the account, you want to pick one of these accounts. Now, the other thing is, again, I have been with clients that have had a cost of goods sold section that has been 20, 30 accounts long, and all that's needed is basically 4 accounts. You've got direct labor. You've got subcontractor expense. You have materials. And then you have other costs. That's all you need on your cost of goods sold. Because all your detail is in that item list. So if you have materials, you have loam, you have tile, you have stone, you have whatever, that's all in that item list. You don't need it in your chart of accounts. So if you want to know what materials did I purchase and how did it affect particular jobs in 2009, you don't need your P&L telling you that. You get that from the item list. So this item list here compresses. This item list here, see all the subcontractor ones here? Okay? So you can have 100 items here and they're all hitting this one account, it's 54-5 account. All you need is subcontractors. You don't need subcontractors roofing, you don't need any of that in your chart of accounts. So all you need is when you set it up is these 4 accounts in your cost of goods sold. And then as far as the income side, again, I have seen in the chart of accounts. Now see here, I would not have set it up this way. This is showing design income. This is a sample file. So design income, equipment rental income, labor income, materials income, and so on. All you would need is one income account, because if you can follow the logic, this has subcontracted labor income. If I wanted to know what I brought in for income for subcontracted labor, I've got it all right here. And I've made them two-sided. So you would have one account, which is basically your construction income account. All you need is one income account. Now you could have a returns and allowances account. You could have a reimbursed income account. Some CPAs like to see that. But as far as job-related activity, you just need the one income account. Because when we go here, I'm going to demonstrate this in a little more detail, but I go to the side of profitability. Okay? This shows all my revenue by all my various categories. So all my details here from an income standpoint. So all this needs to flow through. If you look at the very bottom number, this 664,000, all this compresses to my construction income. All these costs. So you got service. Some of that will compress to my subcontractor expense. Some of that will compress to my direct labor. My other charges will go to my other costs. And my material will go to my materials line. Okay? All your details sitting here. So 4 cost of goods sold accounts, 1 income account, You could have a fifth for the cost of goods sold for equipment rental if your business has a lot of equipment rental as part of your business. I've seen that on occasion. But 5 at the most and 4 most typically. Do you all follow that? That's really important. If you get this set up with these items, just the way I've described, you're way ahead of 90% of all the people out there.
I'm not a
Yes.
contractor, so I don't know what you asked. So it's freight and delivery. You would say to put everything all in the same account, but since I'm a distributor, I wouldn't do that.
Well, freight and delivery, that's a...
Freight and delivery, why does it put under, I don't charge the customer, well, I charge the customer freight and delivery at my cost. So there's 2 different types of accounts. There's accounts and then there's cost accounts. Cost of goods.
Right. Generally, what I recommend for freight and shipping, that's a good point, a lot of people ask it, I actually create 2 shipping accounts. One is shipping customer, and that would be connected to the income account. Just the income, or you could create if you wanted to. You didn't want it to hit because it's not really like construction income, or it's not part of your income. You could create a other income or a miscellaneous income if you wanted. But that would connect to that. And then if you were looking for reimbursement, so if you ordered something for a customer, you paid shipping on that, then you would make that 2-sided and connect that to other costs. Okay, this one here. So on the 2-sided, you have it connected to your main income account or a secondary one if you wanted, and then the cost side of it from UPS, whomever you put
So
on
I
the
put
cost.
other costs down, but so I don't understand these 2 accounts. Account and then cost of the goods.
Account is the income account, and what we're looking at here.
And
Nancy
so
up
I
here?
have to put it down as an income.
Yeah, look up here. So when you're setting it up,
Okay.
the cost of goods sold account is this account here that you're picking to assign on the 2-sided when you have a cost associated with it. Okay? It's an inconsistency in QuickBooks. It's saying cost of goods sold there, here, and it's saying expense here. So this is what we're picking. The cost of goods sold account to assign it to. So in your case with the shipping, it would be other costs. Okay? It's not in here. You have to create it.
You have to add it.
You have to create it. QuickBooks does not have the standard setup. Okay? And then you pick your income account, your main income account. And if you wanted to say, well, I really want to separate my shipping and other secondary kind of income from my main income account, that's fine. You could create a secondary one called miscellaneous income or other income, kind of like you did with other costs. So you can create one and attach it to that. Okay? You're welcome. And that's it for the setup, and then taxable, non-taxable, you can indicate here as well. So that makes sense. We'll can't emphasize how important this is. This is non-reversible. If people screw up and set up, see how service is grayed out? I can't take service and say, whoops, that was materials, I want to put it to non-inventory. Can't do it. Okay? You have to go back and create another item. Say that was for carpet material. Oops, wrong location. You'd have to go and create a carpet material and go back and reassign all the previous transactions, or just start from scratch going forward and forget those ones that were misassigned. So this is unforgiving, this is complex, and this is, you've got to do it right from the beginning. I can't emphasize that enough. So, good. Alrighty. A little more time here for a break. Estimates and invoices. Okay. Again, just restating that I've dealt with a lot of contractors, and one of your favorite tools typically is Excel. Everyone loves to use Excel, and what I see most often is that the estimates and what the customer gets has been created in Excel or Word. And Many contractors are comfortable with that, and it works, and I understand that, but I want to make an argument today for why you use QuickBooks for your estimates. Now, I'm not saying here that QuickBooks will calculate your estimates for you. They will not. So however you're calculating your estimates, if you have estimating software or if you've got some kind of spreadsheet calculation stuff in Excel, you're going to continue to have to do that. But what you prepare and send to your clients as their estimate, I would use QuickBooks for it. And why would we do that? Fundamentally, it's an absolute critical tool to manage job profitability. QuickBooks has a report called Estimates versus Actuals. And I know you all live and die by what you estimated relative to what it turned out to be. So if you put an estimate in QuickBooks, you're going to have the capability of generating a report to look backwards to say, hey, I estimated the job to be this, this is what it turned out to be. Hey, the Guinan job is going to be like the Smith job, so what am I going to price the Guinan job out? Oh, I've got it in QuickBooks, I've got all the detail in there, down to the penny nail, and I can know what I'm going to estimate that job on. So, so on those two bases, you get that historical information of how you did it on an estimating basis and being able to use that estimate on a going forward basis for similar jobs. The other reason to use estimates is that you can generate progress invoices. So you have your estimate in there, and you can generate an invoice from that estimate, and then QuickBooks will tell you where you're at from a progress billing standpoint. Are you half billed? Are you a quarter billed? Are you 3/4 billed? So there's a report, and you say, oh, we're not done billing with that? Okay, we've still got 20% of the job to bill. It'll tell you that within the report. Now, within QuickBooks Premier, you can generate purchase orders from the estimates. And that's something I'll touch on at the end of the session if any of you are interested in that particular feature. The other thing is our estimates are customizable. You can put logos on them. You can integrate it with Word. You can pick what columns show. You can compress information so that you see all the detail and they only see. I was demonstrating the other day to a new client that if you just wanted to show materials and labor and other charges to your client, that you have all the internal data, you can do that. So they don't get to see all that. You know how it is, right? More information raises questions that don't need to be raised. QuickBooks gives you the ability to have, you have all the detail, they just see the major component. You can create change orders within QuickBooks, but as I alluded to earlier, it's not the greatest feature in the program. I've seen it in Timberline and others, far more robust, but there is a way to kind of mimic the process. So if change orders are important, again, I would suggest maybe exploring third-party software for that. But I'll go over today if you're all interested to show you how QuickBooks does it. Estimates are not posted. They're not going to screw up your accounting. Okay, so you can put in 10 invoices, 10 estimates, and they could all be wrong, and it's not going to screw up your accounting. So it's not a unforgiving process. And they're very easy to enter. So here's an example of estimate, just like we did before with estimates and sales receipts, and invoices and sales receipts and bills and all that. If you have all your setup in here, a lot of this is just going to pre-fill. I'll show you in there. And again, we're not going to go over this today, but just to plant seeds in your mind. If you wanted to memorize an estimate template to say that, okay, 90% of my jobs are pretty much all the same categories and lines and all that, and instead of doing this, every time I get a new job, you can actually memorize this, and all you're basically doing is changing for the customer name and for the amounts. So know that you do have that ability. You can also put all your language in here of, protected legal language about, the estimate, about the binding nature of the estimate, and any other legal information you have. You can do the same thing on invoices about finance charges and all that. So then you would memorize this, and then it'll be available for you every time that you have a new job. And there's some of the language down here. Please sign this change order. That's a memorized message. Let me go to that.
Frank. the items, when I got started using Estimate, the items that I use in billing and invoicing were not in the estimates. You have to go back and enter all those again, or did I do something wrong? Like where I have my plumber, where I bill out or put my plumber and pay my bills and stuff for my plumber over here, my chart of account, I actually had it in chart of accounts as opposed to as an item. But
Right.
is that why? Because I didn't have it as an item, I had
Exactly.
it just, my chart of accounts was one that was like that.
Exactly what I
So
was talking about, yeah.
compress that and switch it all over to,
Correct. Yeah.
okay.
Yeah, estimates, invoices, and sales receipts are all item driven. So anything in your chart accounts, you can't put on any one of those. So if you're using those features, you have to have an item list.
You're going back.
Okay, so we get to estimates. I just click on this icon, estimates, and then I'm in. And to show you an existing one, I'm just going to hit previous. So again, you have, well, it's not. See this estimate with change order? That's a customizable name. So it's basically, instead of having estimate type in there, whoever customized this just type in estimate with change order. That's not a specific separate feature within QuickBooks. It's just a name variation, that's all. All right, so here's an estimate. We've got Doug Jacobson, the pool house. So that's from your customer list. Class, again, picking whatever. So we'll say this is a remodel. Tapping my way through, again, fully customizable. You can add logos. The columns that are showing up here, you can have some show, some not show. Some can be printed. You can do a lot of variations here. The date would be today's date. Estimate would advance automatically according to the previous number that was in there. Ship to address and this name and address over here, again, are part of the customer setup. All right, so we have this estimate set up, and all of this comes over from the item list that you're entering in one by one. And again, remember the cost, the description, all of it here was done when you originally set up the items. So the better job you do of setting up the items, the easier this is going to be to fill out. Now, I recommend using the markup feature because if you don't, when QuickBooks creates the estimates versus actuals report, the estimated cost and the estimated revenue are going to be the same. It's going to be the same number. So what you would put in here is your estimated cost that you receive from all the various components here, from your materials vendors, from your subcontractors, and all that. You would put in this column here. Now, your markup, you can put as straight percentage. I believe what you can do is then simply type in an amount here. And I think it'll calculate the amount. Let's see if I try that. Huh? Well, actually, I think, yeah, you type a percentage or a dollar amount. So if you knew the cost was $35 and you knew you were going to fill out 50 on it, so you just put in $15 here. I'm sorry, $840 plus 15, $855. Okay? So you can either put in a percentage amount here or a dollar amount to get to the amount that you're going to bill them for, the amount that you plan on collecting. So what I've seen in a lot of people using the estimate feature is these two will be the same. They won't put in this column here. And you lose some value in doing your estimates versus actuals because you didn't put in your cost side. Okay, so put in both. Whatever estimates you got from your material suppliers and your vendors, you put here, and then you put in what you plan to bill out over here. Okay? Now, if you wanted to break this into pieces, so you have a heading up here called labor, so you want to put in here a subtotal So that's another item in QuickBooks that's automatically in there. You don't have to create it. So you got subtotal, and so it created here a subtotal, and I can type in here. Labor. You can also do phases of job. You know, general conditions, excavation, framing, whatever. You could group this estimate according to the various phases of the job. Yes?
If you're already at a fixed price, will that come up with the, that looks like you're going to re-enter every item again. No, you check the item on the left, and then it gives you the fixed cost you've already had in your item list.
Correct.
So if the cost changed, do you go back to that list to change the cost, or why would you do this? Why would you do the markup when you're already did the per item cost in revenue?
This is what you're planning to bill out on. It's not going to, this cost is going to come from yourself. Okay? This markup here is what you're doing manually. So it's not going to, that you have the cost and the sales price. That sales price doesn't show up here. It shows up on when you're actually doing the invoice. Okay, so there's no field here for it to come over. So, but this will come over from your original setup.
The cost.
The cost, yeah.
Are you asking because he's marking up us? You're marking up services, right? No, I do invoicing. I mean estimates now. No, I mean, I understood what you said. Once you're putting in the item, you're putting the cost in the price you want to charge. Why? She's saying why you bothering to mark up if when we added an item we put both cost and sale price.
Yeah, I don't know why it doesn't. So if you put in, so the cost here is 35, and say your markup's $40, why it doesn't come over automatically? I don't know.
It does come over automatically.
On the estimate?
Yes, because I do that now.
Okay.
My entire business, I've done it with. I don't do the markup at all. I just say if I want to put in 3 recessed lights, it gives me the quantity and it gives me what the price is going to be. If you add a field for the price, it brings over the price from there.
Well, here, let's look at it. So we've got framing at 55. So that's the, you can get a two-sided one. Two-sided. So we got 120 and 590.39 for exterior wood doors. So if I go to estimate, let's add a line. Okay, you're right. The way I've seen that before is that you have to type in the markup. But I don't have everyone who uses these boxes, the cost and
Well, we go up per
This
item,
here.
so that would be.
Okay, so that's-
I figured out how to do it one time because I built my item.
right. So
Versus the whole service.
So her point here is that if you, again, set up the items properly, and if you had, in this case here, the better number would be $100 here for the cost within the item, and $120 for the sales price. When you create your estimate, you'll populate that automatically. And calculate the, what's that, a 20% markup, will show that automatically.
But will it work with your actuals then when you do your chart, when you do your comparison? Will it, because you said it, when you do you compare your estimate to your actuals, will you still get that profit margin in it? If you don't have it in the estimate?
If you're saying, say that again, if you...
You said that when you do the estimate, you have to put your markup in your estimate so that when you do your actuals in your estimate, you make sure if you stayed on target or your margins were what you thought they would be.
Right.
But as long as you've done it in the item column, like what she was saying, then you're still going to get your proper margins off that report.
Well, that's going to show your projected profit on it. So yes, that would calculate automatically. But when you're looking at your, yeah, well, let me show you the estimate versus actual report. So in this case here, so your actual revenue versus your actual cost. So it doesn't calculate a margin on the screen. Okay, it's just calculating the variation between actual and estimated revenue and actual and estimated cost. So this report here isn't intended to do any margin work.
Okay.
So the margin would be for your another report, which will show your actual revenue relative to your actual cost. This isn't that.
Okay.
Okay, so to recap here, if you've done your items set up properly, and what I've learned something new today is that, because unfortunately we tell people to use all the features in the program and they don't, and so I don't have a lot of people putting in both sides. A lot of them don't like to put in both sides because prices change and costs change. So kind of, I don't have to be in there changing all the time. Can I just do it on the form itself? I'm like, yeah, you can do that. So I have not seen anyone firsthand putting them in, creating the estimate, and having what you described. So thank you for that. That's another reason to put in the cost side and the sales side, because it will pre-fill this form and calculate the markup promptly, so you don't have to do that manually. Yeah.
As far as the item, you can continually add new items.
Yes. Yeah. Add new items to the list or add new items to this? To the list, yeah. It's, like I said, QuickBooks Enterprise goes up to like 1 million items, and I think Pro and Premier, I think are in the tens of thousands of items you can add.
When you're, like, say you buy, say you sell buckets. And
Selling what?
Buckets.
Buckets.
And, you know, this is the first time I bought my buckets, and I put in my bill for my customer, for my vendor, and it says new item you want to add, and so I go and I do the little 2-pot, I put the cost in, and I tell it what I want to sell it for. 3 months down the road, I run out of buckets, so I have to buy more buckets from the same vendor, and the price has gone up. I go and I do my bill, and when I punch in buckets, it's going to think it's the old price, but I change the price there, and then say this goes on and on and on. And then I go and I look at my item as if I was entering it, but look at what I've entered in, and it actually says how many buckets I've ever ordered and my average cost. It figures it all out. So the only thing you really have to keep changing would be the retail, manually. When you want to change it up, because it's working out an average cost, or do you think you should change the cost every time?
Again, it's from a data entry standpoint. So, yeah, if your materials costs are changing constantly, I wouldn't necessarily use that cost box. But if they're fairly constant, it's for purely data entry purposes. It doesn't even do calculations because it's driven by the bill you enter in from the vendor. So, like you said, if you've got $30 for whatever per bucket in there, and the bill comes over at 35, well, you're putting in 35, and that's going to trump that 30 that's in there in the item setup. So the issue is, from a data entry standpoint, if you have fairly constant selling prices and cost prices, use those boxes. If you don't, and I think that's why quite a few don't, is because there is such variation. They'd rather, have the calculations going on in here. So that would be the kind of general rule I would use. And in Enterprise, I don't think it's in Premier. In Enterprise, you have the ability of updating your prices. So you would go to your item list. I can't demonstrate it here because I don't believe I have the function. You can basically access a feature called Update Prices, and you can go through and update all your prices in here very quickly. Instead of having to double click, open it, go to the box, type it in, they'll have the prices field, so you can just type it in and update it as you go. Okay, so in creating estimates, so you're entering line by line. You can do the subtotals. I recommend doing both the cost side and the markup side, which you can capture both if you use both the cost box and the sales price box. And then from here, so anytime you want to start over, so So anytime you're in something and you want to start over from the beginning, if I hit revert, it gets rid of all the changes I made. Okay. So now I want to create an invoice from this. Where are we? Okay, so yeah, that's different now. But create invoice. You have the ability within Premiere to create an invoice, a sales order, or a purchase order. I think within Pro, you only have the ability to create an invoice. So if I click invoice, do I want to continue? Yes. Save anyway. So these are your options. You can create an invoice for the entire estimate. So if I hit OK to that, this entire $6,323 will now be converted to an invoice. If I wanted to create an invoice for a percentage of the entire estimate, so if I said 20%, all these line items would come over at 20% of their value that they show on here. And if I wanted to create an invoice for selected items for different percentages, and that's what I recommend because it gives you the most flexibility. Because if you do the entire invoice, unless that's your reality and that's what you're billing for, that's fine. But if you create an invoice for a percentage of the entire estimate, in theory, you're billing it for something that hasn't been completed yet. So this gives you the ability to create an invoice for selected items to reflect the reality of where the job is at a given point. So if I hit OK on that, I have a lot of flexibility here. So I can say for removal, I'm going to go 100%, 100%, 100%, 75%, 75%, 50%, and down here, I'm going for $100. So you can interchange between dollars and so $50 there. So you can interchange in the invoice you're creating either by percentage or by dollar amount. And again, by doing it this way, you can bill out by phase. So if you're ready to bill them for general conditions or excavation, or if you're ready to bill them for just earlier part of the job versus later, this gives you the control to do that versus having one blanket invoice from all phases of the job. And again, this is more reflective of your reality.
When you go back in, does it show you what you already billed for?
Yep. If you see this column here, prior,
Okay.
prior percentage, and prior amount. Okay. So if I hit OK, there it is. It's created an invoice for $3,000, all according to those amounts, and then print it out, send it. And so when you go back in, these amounts will already have been billed. So it's just Jacobson and Pool House. So if I hit save and close, anyway, so now I go to my report, job progress invoices versus estimates, and go to Jacobson. Go to buying. All right. Doug Jacobson. Yep, Pool House. It's 48.74% billed. I just did that invoice for $3,082. The estimate total is $6,323. So here you know your status if your bills at any particular point. Yes?
Aren't you the revenue invoicing now? Not the manual, but like percentage, the middle
Yep.
portion? So if you go back into the estimate, you change orders. When you do the final bill, say you do the change orders, I bill weekly, so if I do the change orders at any time after that first invoice is created, their bill for their final bills don't pick up those changes.
Right. And
So can you make that do that, or should I write this off?
you might consider buying other software, or again, if we could go over this later in the session, but just as a general consideration, you could consider creating a separate estimate, change order kind of a thing. So let's just say the total job is, $200,000 and the change order is $50,000. So you have a $200,000 estimate in there, and then a separate one for $50,000. That way, that would maintain the integrity of what you're talking about. And you can name it. So if the estimate is, I used this example yesterday, 1234, then your change order will be 1234 CL for change order. That might be one way to do it. try that and see what that looks like. And if that gives you what you're looking for, great. If not, then you might consider buying a third-party software. Again, QuickBooks isn't strong on the change order. You know what happens when you do change orders, right? It just puts that stupid little description at the bottom of what you did, and it'll change the items on the change order, but your estimates, the original estimates, change permanently. So you've lost that. So ideally what you want is you want a thing that's truly an estimate and truly a change order, and they're connected. Technically, the only way that estimate and change order is connected that I just described to you is by the customer. So
on the toolbox, it would have change orders.
yes, it would show Jacobson estimate. So this is what number 612. So you have 612 CR.
And will it create a negative change order?
No, we're not creating any change order. So again, you could monkey around to somehow. What I've again, this came up yesterday. What I've suggested is what you can do is keep the original invoice in there, make a duplicate of it, and then you can monkey around with that duplicate until it's final. Once it's final, so you could modify that original, create successive change orders, and once you're done, delete the original. Once you're comfortable to say, okay, now I know what this whole final project's going to look like. So hang on to the original until you're sure everything's the final, so to speak.
Right, the problem is I've already read it filled out twice on the progressive.
That's the other problem.
So
Right.
then I have to end up deleting it.
Right, I know. Yeah. It's not. It's funky. Yeah, that's just no easy way. Right. So if you've already billed, that's a whole other
So
issue.
I'm not missing anything.
No, you're
I'm
not.
not
No.
unaware or something.
No, that's why I said earlier, change orders is important. QuickBooks isn't necessarily the way to go. So, but I'm fairly confident I've seen in that marketplace and into it some good change order software alternatives that'll do that for it. So, you might want to look there.
Can I just,
Yeah.
when we convert an estimate to an invoice, in my lingo, at that point I've got an estimate and then I consider it my contract. That I then, enter into a legal arrangement with my clients.
Right.
But in QuickBooks, the invoice would be my contract. I mean, if I have signature lines and legal verbiage in it. Is that right? There's
I would
nothing
not.
else.
No, the estimate would be the contract. That's what.
The estimate would be my contract.
That's what I would suggest using QuickBooks
Okay.
as the best practice.
Okay.
And their invoices are what you're billing them from that.
Okay, so the estimate then, once it's signed, it becomes the legal.
Yep. And you put the verbiage, like I said, you can memorize an estimate template with that verbiage in there and all that, and that's what I would do.
Okay, very good, thanks.
You're welcome. So if I delete this invoice, it'll adjust all the numbers back on that estimate and it'll be fully billable. This is one of my favorite features in QuickBooks. It's so powerful and a lot of people are like, wow, it really can do this? So what QuickBooks is able to do is to take any bills you've received from your subs, your material suppliers, anyone you get a job-related bill from, and take that information and put it on to a customer invoice. So again, I've seen this with a lot of smaller contractors, weekly or bi-weekly, whenever they're coming up with bills, trying to figure out how much they can bill them for. So they've got the stack of materials bills, stack of sub bills, and trying to piece them together. What job is that for? What job is that for? And trying to piece it all together. If you use QuickBooks properly, what you can do is you enter in all your materials and vendor bills, and you connect them to jobs. So, and you mark them as billable. So when you go to generate that invoice for that particular job, it's going to pop up and say, hey, you've got all these billable costs in here. Which one of these do you want to send to the customer as a bill? It's a really powerful feature that really saves a lot of time and really increases the efficiency of what you're sending out. So the example here is Timberlock Lumber. We could call it Shepley's. And we've got, again, job related. You're using the items tab. So these are items you've created. So we got trim lumber and door frames, 10 each. Again, $95 and $12 again from the setup. So you get the total amount. And here you have your customer, Christy Abercrombie, bathroom remodel. And the key thing here is you're going to say, I want this to be billable. I want to take these two amounts and I'm going to create a bill for her at the end of this week, and I want those amounts to show up on it. And the class is remodeled. So this $1,070 would be consistent with the bill you got from Shepley's or Midcape or whomever. And you're taking that amount and you're putting it to your customer bill. So when you go into the customer invoice, it's going to give you a message and it's going to say, you have billable time, billable expenses for this particular customer. What would you like to do? Either you want to select the outstanding billable time, or you want to just, I'm going to create a bill apart from that. Now, the potential conflict here, and there is a way around this, I've done it for some clients, is in theory, you can't create a progress invoice and do this too. Okay, because the progress invoice, you're feeding off the estimate. Here, you're feeding off the bills that are going into the system. So you can do both, and it's complex to do it. But the unfortunate thing would be really nice if you went to create a progress invoice, and QuickBooks would say, hey, you got all this billable time here, you want to grab that and create the progress invoice from that? It won't do that. It's one or the other in QuickBooks, the way it's set up, but there are some ways around it. So in here, there is a way to take the various costs and you get all the detail, but if you want, they could see a labor line, a material line, and another charges line. By this box here, print selected time and cost is one invoice item. And I'll show you how to do it. And then we'll have our break. Next break. All right, so we'll go to bill. There we go, Timberlock lumber. So we're just tabbing through, and we're picking the items from the list. So the key thing here is that you're making sure it's billable. If it's not billable and you're not going to use this feature, you're just progress invoicing, then you would uncheck it. I believe the default is billable. So you want to make sure it's unchecked if you're not going to use that feature. So in here we're saying yes, it's billable. Make sure it's for the right job. Then you hit save and close. Now, when I go home and I'm going to create an invoice for Abercrombie for the bathroom remodel, it's going to say, hey, you got an estimate in there. Do you want to create it from that? I'm going to say no. Now it comes up with this message. Do you want to select the outstanding billable time, or do you want to exclude it? I want to select it. So I'll show you the variations that I can do here. The first thing I'm going to do is labor. So these are all the reflective of all the timesheet hours that have been put in for this job for the employees. So I'm just going to check off these four. I'm going to say print selected time and cost as one invoice item. So put that in, and I'm going to say total labor. Now I'm going to go back here and add time and costs, and I'm going to go to my items. And I'm going to select
Frank, I'm going to have to do a tape change.
Okay. So I'm almost done. So I'm going to click this off, and I'm going to hit OK, and I'm going to select materials. And then the last one, just for example purposes, just pretend these are, there's only one in here, but other charge, just imagine there's more than one item there. And then we'll just call that other costs. So now I go here and do a print preview. Okay. So I've got a labor line, a materials line, and another cost line. That's all they're going to see. Okay. But what you have is you have all your detail. Okay. So if that's how you want to generate your bills, this whole reimbursement group, that's the item that is used within QuickBooks to do that. You can do that estimates if you wanted to request things. You can do that on invoices. But within these invoices, it's this box that drives the ability to do that.
Correct.
They can't.
Well, why don't you just create one credit memo for 100?
Well, because there are existing credit memos over time. They're actually transactions. We take back the tag, we give them the credit memo.
Right.
And the only way I've been able to do it is order one of them, make the other one 60, it's about, yeah. But it's like,
Can't.
it
There's
can't,
nobody
it
to
doesn't
combine.
know that even though I'm printing 2 checks to the same person, to combine them together.
Right.
How about if when you're there, you know how if you say actually printed it and it has them both there and it asks for the check number? If you put the same check number there, it'll still print them.
It should give you an option in there, and it doesn't. I agree with you. There should be like an option in there. Would you like that?
Because at the end of the season, we'll have a customer that has 4 different credits, each one for $40.
Yeah.
So I gotta write them 4, used to write them 4 checks for $40. So then I figured out I could go in and void 3 of the checks and write the 4th one for $160 and print that.
Or, you could do, create an invoice for $100, apply those credits against it, and then just create a $100 credit.
Yeah.
Yeah.
And then the numbers don't correspond.
We already know that, so it's a different way of more work. You know?
Just give them 4 checks.
Whenever you're ready.
Okay. All right, we'll go into our next section then. The reason I included this feature is it's a very easy feature, but it's a very powerful feature. In this economy, we should all be thinking, how can we save money? How can we better manage our businesses? So QuickBooks has a really easy to use budgeting feature that you can implement to get a sense of how you're tracking on your income and expenses at any given point in time, so you can then make adjustments. So budgeting can be a 4-letter word, and being an accountant type, it's a 4-letter word at my house with my wife. She absolutely hates me when I said, "You're over budget, babe." She's like, "Oh, shut up," So, but it should be a 4-letter word for a business, because it is a proactive tool to help you, particularly in this economy. Many of us are probably experiencing flat or declining sales, but costs don't go down typically. So what this will help you do is, as you are experiencing flat or declining sales, is to put a budget in place to kind of anticipate, to say, okay, if this happens, what can I do to anticipate that and be proactive? So again, a lot of you are sitting here today because you are proactive owners and managers. Again, just a general best practice is a budget is best coordinated with a business plan. Again, QuickBooks does have a built-in business plan feature. They keep enhancing it every year, so that's just something to keep in the back of your mind. And a business plan doesn't have to be a cumbersome 50-page plan. You can do a very simple couple-page plan just to say, where am I going to be in the next year, 2 years? And I've worked with some decent-sized companies here on the Cape, and the ones that are doing okay are the ones that foresaw what was coming and anticipated, and they had a plan in place, they had a budget in place, they didn't react. As I'm showing you here, it creates a culture in your company. If you're constantly reacting and putting out fires, and after the fact versus anticipating, and they go, "Wow, how'd you know that was going to happen?" I mean, none of us know exactly what's going to happen, but we can kind of guess to say, okay, the economy's off, so I'm going to see how I manage my business if we were off 10%, and you can plan accordingly. What's it going to be 5%? What's going to be 20%? So you can kind of plan as you go kind of thing. Now, as far as your banking relationships, again, we're hearing in the news, you don't know who to believe these days. Are banks lending or are they not lending? From what I understand is the smaller regional banks are lending, Cape Cod 5, Bristol Savings, Cape Cod Cooperative, the smaller banks. I guess the CEOs of the larger banks, Bank of America and all that, said they're lending. It's not at the same clip they were doing at the boom, but they're still lending. So for you, using QuickBooks and having a budget in place, having a verifiable balance sheet and profit and loss, to go into a bank with that versus going into a bank with a shoebox or a one-right system or, I don't know, just lend me money, the bank is more likely to, particularly in these times, lending standards are getting more strict, you can use QuickBooks to stand out relative to others who are competing for the limited amount of dollars that are out there. Can't emphasize enough, the budget will go a long way to reinforce your credibility. Also for outside investors, any sophisticated investor is going to demand a balance sheet and a profit and loss that is verifiable. If you throw on top of it a budget saying this is what we're anticipating for the next 18 months, it'll go a long way towards people saying, I have confidence in you, sure, I'll lend you some money and invest in your company and help you go to the next stage. QuickBooks has quite a few budgeting options. You can budget by P&L, by account, by class, and by project or job. And the balance sheet can be done by account. I don't know anyone who, I guess the balance sheet, you can kind of anticipate where your loan balances might be at a point. You can kind of budget out where your receivables will be and all that. But typically, the budgeting feature is used for the P&L. QuickBooks gives you the ability to use your previous year's data or start from scratch. So it doesn't go back any, someone had asked, if you have 10 years worth of data, will it somehow average those 10 years to come up with a budget? No, it just goes back the one previous year to from the year that you're creating the budget for. So to access the feature, you just go up to the company menu, select planning and budgeting, and then select set up budgets. And this is an example of a budget, a P&L budget by account. And this next one is an example of a P&L by class. So you can do it by your divisions of business.
Realistically, you can't create your budget in there, can you?
Yeah.
Really? How do you
Why
know
would
you
you?
have totals?
Yeah, I'll show you.
We always seem to do ours, and we've been doing it for 5 years, but
I'm not sure what you mean, but I'll show you. It's,
in an Excel spreadsheet, so you can have totals by.
so if you go up to here, company, planning and budgeting, set up budgets. So the one I showed before, we'll do P&L by account. Actually, to go to the beginning, because there are existing budgets, that's why I came here. If you want to create a new budget, you pick your year and you do P&L, and then you can pick by customer, job, or class. So we're going to do just by account. And then you can create your budget from scratch. So what's going to come up will be completely blank, or you can create a budget from the previous year's actual data. Then you hit finish. And then what's going to come up is this if you've chosen to use previous year's data. So here's your totals right in this column here, your annual totals.
Well, but it doesn't give you your total income. It only gives you your total. What's your total income? You have labor income and you have, I can't read all those, but materials income and you've got.
Right, but when you go to your, I believe when you go to your report,
It'll, depending on how you have your account set up, yeah.
so if you go here, so there's my budget total income. I think everything.
Right, but if you're actually trying to build the budget month by month,
Yeah.
we've always found that it's really hard to do it right in there. You got to do it in Excel and then just put the data into QuickBooks because you can't look at the totals. Well, say I know that I want my total income for next year to be, pick a number, $1 million.
Right.
I'm not going to do, it's not going to be even over the 12 months.
Right.
So I need to know that the total is $1 million as I'm adding in each month to make sure that my total income is $1 million. Depending on how you're building it, are you building a cost-based budget, are you building an income-based budget?
Right, so if we go to create one from scratch, so some of you may have income components, or you might just have one line. So you're talking about multiple lines?
Multiple lines of income, yeah.
Okay.
Well, like this one has multiple lines of income, right?
Right.
Yeah.
But wouldn't you know your components? Why wouldn't you know if you've got $1 million of total income, you've got to have a sense of what the totals are going to be for components, right?
Right, but how do I know that the total equals $1 million at this point? You start adding numbers in there, how do you know it's $1 million, you got $1 million?
Right, well,
It doesn't
I would say my design income component is going to be $250,000. That's how you'd have to start.
Right.
So if that's looking right, then it does give you your running total here, so I'm at 10,000 right now. And then,
Yeah, only across the row, but
Right.
not across the column. So how do you know when you're at $1 million worth of income?
You don't. You have to know your components.
Right.
So, but I think you would be doing it by component. I would think you wouldn't be doing it by the. You have your total $1 million, and you got 3 items, and each of them are going to be $333,000. I don't think that's how you'd be approaching it.
Yeah, but in the seasonal nature of your COD, it can't be even. It's not even. So you got to then build it up both ways. It kind of.
No, but I'm saying by component.
Right.
So that's the only way you'd approach it is
But
to break that
add
million.
summaries.
No,
There's
no,
no
no,
summary.
no.
Okay.
So as you see here, I've got just putting it in from scratch. I got the 10,000 and the 20,000. So you use the feature?
Oh yeah, we've been using it for years.
Good for you. I'm glad you're all here. I don't know many who do use it. So I preach the mantra
It
of
worked for a
using it.
not-for-profit that also used it. So
Yeah.
that's how I got into using it. So we get into using it.
So if you wanted to save data entry, you could just hit copy across. So it'll take you 20,000 and just put it across. If you wanted to adjust your row amounts by a specific amount, so I wanted to say each remaining month I want to pop by 5%, it'll do each of them by the 5% equally. So 21,000, 21,000, and so on. Just saving some data entry. I go back here and I say I want to enable compounding, and I do 5%. It's going to do the percent upon percent. So we'll go from 21 to 22,150 to 23,152 and all that. So again, just ways of saving data entry. And then the profit and loss by class. So you have your various classes here. So you can just do the process I just showed, and this is another way of just keeping on top of your business as the year progresses. Instead of having a generic budget, if you are by class, you should have a profit and loss by class. And then they do have the profit and loss by customer. I don't recommend that. Use the estimating feature in QuickBooks because that'll give you the equivalent. So that's as simple as create a budget. I mean, these fields are the ones you just type in and you put in your number, and it gives you your running total, and then you have ways of saving time and data entry. You can't copy from top down, you copy from left to right. But I would suggest the best practice of using this feature, I don't know how to use it, but is use your previous year's data and have it come over, because that gives you a point of reference to know where to start, so to speak. So it'll all be in there, and then you can just type over it and go from there.
Yeah, that's exactly how we do it. But typically, we'll export it so that we can change the percentages by month depending on growth and stuff like that.
Now, when you say export it, you export your P&L.
We'll take the P&L and last year's budget, figure out how badly we either hit or didn't hit last year's budget, export them both, add an extra column for every month, go in and figure out, okay, we want to increase, say we want to increase our growth for this year. We hoped last year was going to be 50%. It ended up being 60 by the time we were done. This year we're shooting, I think, for 25%. And so we want to make sure the total number is 25%, but then you got to distribute it. We're not going to grow in January.
Right.
If anything, we're going to, actually might even get smaller this January.
Right.
But so then we go in and each individual column and row, each row, whether it's retail income, wholesale income, we actually even have more classes than that. And then we go in and manipulate individual numbers so that in the end the bottom number is acceptable and all the individual months are.
Yeah.
And then we track by month. So I can go and look after sales go in today. I can tell as of today whether we're on budget for February.
Right.
It's not all that pretty right now. February.
Well, 25% is a big number, so if you're at 5%, you're doing better than a lot of
Exactly.
people.
But the question I have is, if here's it, QuickBooks then takes that number. Say you're going to do $10,000 this month, and it splits it out over the number of days for this month. Do you know if there's any way within QuickBooks to tell it to basically ignore the weekend days?
No, I don't have that.
Because then what happens is on Saturday you're looking good, by Monday you look terrible because you've missed two, what they consider basically selling days, and there's no sales.
Right.
Oh, I didn't even think about that, but yeah.
Yeah. So I was looking at Friday's data, not Monday's.
And then when you're done, as you're going, you can hit save, and then when you're completely done, you hit OK, and you have your budget in there. So then the next step is to track it. Again, you track it on a regular basis. And so you have reports, budgets and forecasts, get your budget overview, so you pick which budget you form. Someone asked us the other day, and I didn't know firsthand, I don't know. It only lets you create one budget per year, right? You can't create multiple budgets per year, right? Okay. That's what I figured.
That I've ever been able to say.
Yeah. It makes sense too, because how can you do this report if you have multiple budgets?
Well, and the hardest part is you got to create the budget, then you go leave it. You shouldn't have to change the budget.
Right. So that's the. Are you aware of the forecast feature in here?
No.
We're not going to go over that today, but the purpose of that is to do just that. You can set up a forecast. So that's basically your variation from the budget. So you don't touch your budget, you keep that steady, but the forecast is what you would change as the year goes. And it's the same process as the budget.
Now, is that a Premier feature or?
Good question, I'm not sure.
Okay.
I'm not sure if that's
I'll look at it.
I'm guessing it's in, well, they say that in Premier is advanced business planning features. So I don't know if that forecast is one of those.
The forecast?
Because I've never
Yeah.
seen the business plan tool either.
Business planning tool is definitely Premier. You have Pro? Kevin?
I got them both, but right now I'm looking at Premier. You asked me, does it say set up a forecast?
No, does Pro have forecasting when you're in Pro?
So anyways, this will give you your budget overview. So you can just look at it all on one screen.
I have to say that doing a budget makes you feel better.
So here's that total line that she asked about, but you can't get within the budget. This will give you a total to see if it makes sense. So if it doesn't, you have to go back to the budget and change it and all that.
Because even when things feel like they're not, like, oh, gee, are things slow or not slow, we know we have a number. You know, we have, if we make the numbers, if we get relatively close to making the numbers on a monthly basis, then we'll get relatively close to making the big number, and everybody will get paid, and everybody gets their vacations. And so frequently I find that I'm like, oh, okay, it sounds better than I thought it was.
Right.
You know, because your perception is frequently way different than actual. And so for us, we look at it a lot. I probably use that more than I use anything else in QuickBooks.
That's great.
2006 QuickBooks Pro says for planning a budget, this goes set up budget, cash flow, project, and management decisions.
So there's no forecasting. Oh, there's that.
Then you have your budget versus actual, what's your first name again? Beth. Which Beth uses regularly, which again, like you're tracking it on a daily basis? The budget
We try to do it daily. We actually the other day were looking at it on a monthly basis, and even depending on how long the month is, when the days fall, it can make it a significant difference for us. We sell more beer on Friday than we do on Monday.
Yeah.
So if the month ends on a Tuesday, sometimes it's not as good looking as when it is on a Friday.
Right.
So it just, we try not to look at it too closely,
Right.
but we do a lot of this, and we also do like this year's versus last year's, and what was last year's budget number versus this, because the other thing is a little bit when you're budgeting, you're throwing stuff against the wall.
Right.
Let's go for 25%. Okay, what do you think?
Right.
So we find that it does make us feel a little bit better. It also finds that we're making some decisions about, like marketing decisions we need to make for the spring based on the fact that January's number wasn't quite as good as we wanted it to be, or and things like that. So because we know if we make all the numbers, then everything will be fine.
Right.
So for us, it works really well.
Good.
And then I can also print out for my sales guy. I don't really want him to see all the expense stuff.
Right.
So I can then go in and use modify report, and do filter, and I say income accounts only.
Yeah.
And then he can and I can print that report for him, and he can see where he's making this number or not making this number on income, and not worry about the financial side, the cost side of the business, because that's not really his thing.
Right. Good. Good stuff. It's always good to hear people who are using these. So this is your budget versus actual, and I broke it up by days. You can break it up in any meaningful period, so it's typically month. So it'll give you your this is January of 2012, your budgeted number. This is the actual, that's the budgeted, and then your dollar over budget, percentage of budget. So you can just like she's describing. We can track this on a regular basis and make the adjustments as she goes. And maybe other report. Topic. Last budget performance. Pick which one it is. Hit next. Finish. And class flexibility to read. You probably use this too. That's just kind of
Not as much.
no. Because what this compares.
Because I haven't seen it before.
Well, this compares your month. This compares your year to date, and it shows you your annual budget. And then I would throw this into Excel, and then have some columns.
Yeah, I've never seen this report before, so. You get into the thing where you use certain reports, and
Yeah, you get comfortable
I
with
have
it.
them memorized across the
Yeah.
top, and they're the ones I use, and
Yeah.
so it's kind of one of the reasons why I came, because it was like, there's got to be things that this thing does that I don't know how to do yet. So.
Right. Sometimes you know most everything because it's pretty straightforward. So I would put this in Excel because you can put dollar difference in percentage budget. So this will show you year-to-date budget difference. What would be cool is if they had a column, well, if I'm tracking on this, how will I end up in my annual budget? And that you can
That's
play
part of
around
your
with
like
Excel.
cost to finish. Too.
Yeah, exactly. There's nothing in the budgeting feature to do that. We'll probably come out with that.
We do find when we use these reports, a lot of times my husband really likes them so that they're sorted with the biggest numbers first, so then you can
Yeah.
see your biggest your biggest income centers
Yeah.
first, because frequently it'll do it by whatever way the account is, or alphabetical,
Right.
or some
It's usually by the account.
Yeah.
It's the chart accounts driven by that.
Yeah, so like my bottle deposits show it first, and
Yeah.
they don't really,
Right.
they're not really part of the grand scheme of things.
So that's pretty much the budgeting feature. I hope you see that's very, very simple and very powerful. Just getting the numbers in there and then using the reports and monitoring it on a monthly basis. Anyone have any questions on that? That's basically the presentation. I went over the other night. I'm under today, so if you all have specific questions, I'll hang around. Anyone have anything specific?
Do you have to reset up classes to be able to do that budget thing? I mean, because I'm...
Well, there's profit and loss by class, so if you're going to do your, you don't just have to, if you're doing the budget by class, yeah, you'd have to have classes set up.
Well, like, do you set up classes on?
We don't use classes though. I don't use classes at all.
Maybe this from last year.